Hello, ladies and gentlemen. I hope you are fine wherever you are. I am the Acca tutor, Mr. Jerome Timkulu, and those are my numbers on the header there. Now, in this video, we are going to look at relevant costs uh, or the costs that are relevant for the purpose of investment appraisal. In the previous video, in this week 4 series, we talked about the arithmetical aspects related to the time value of money concept, as well as to the investment appraisal in general. Okay, so we are going to build on that previous knowledge as we now try to understand how to identify cash flows which should be considered whenever we want to appraise an investment. Remember, for you to do an NPV computation or an IRR computation, you need to know which cash flows are relevant. All right, so this is the purpose of this part of the video. Okay, and I'm sure you still remember as well from your previous management accounting or performance management studies that relevant cash flows are those cash flows which are going to be incurred in the future or which are incremental or extra. Okay, incremental or extra cash flows. All right, and with that background, we understand that non-cash items or non-cash flows are irrelevant. For example, depreciation or amortization, those are non-cash flows. Okay, they're just as a result of accounting conventions, so they are irrelevant. Then fixed costs are also irrelevant. Historic costs, for example, the purchase price of an item is also or the purchase cost of an item is also irrelevant. All right, then interest costs, particularly interest costs, they are covered by the discount rate, so they are also irrelevant. But an opportunity cost or the cost that is incurred for foregoing, okay, or during the process of foregoing a certain course of action, those costs are relevant. For example, the if we have a building and decided to use the building for the purpose of doing a social business, okay, we are foregoing a rental income, okay, because in that shop we could have sublet it and get some rental income. So because we are now using the space for grocery shop, then we are foregoing rental income, so that's a cost to the business. All right, let us have a look at this example and see how we can make sense out of this explanation. All right, the road agency in Marbleland has commissioned a research project which to date has cost the agency $150,000. The project is currently under review. If the project were allowed to proceed, it will be completed in approximately 1 year, when the result will be sold to another government agency, all right, for $300,000. Okay, shown below are the additional expenses which the managing director estimates will be necessary to complete the work. So after you read just the first paragraph, you just have to go straight to the question requirement. Advise the managing director of the road agents as to whether or not the project should be allowed to proceed, explaining your reasons for the treatment of each item. So you need to be systematic. So you just go to your spreadsheet portion during the exam, go to the spreadsheet portion, and you start to note down your answer. So we are here. This is our spreadsheet, ladies and gentlemen. So we are required to advise. So you remember, this is more of an NPV computation. or a cost card computation where you want to determine the cost and the profit of the investment. So you come here and you open up. All right, you can say issue. You can say issue, and then reason. Okay, a reason for considering or dropping it. Okay, and then you put your dollar sign here. All right, let's do a little bit of formatting because I think this one has to be opened up as well as this one. We can as well increase it up to here. All right, so let's start with the first paragraph and see what we can do with it. Materials. Let's start with the materials. The materials required have just been purchased at a cost of 60,000. All right, so the materials have already been purchased, right, at a cost of 60,000. Now, if the materials have already been purchased, then we know that those ones are irrelevant, okay, because we consider them sunk costs. All right, they are an expense which has already been incurred. So for the purpose of our investment appraisal, we need to ignore them. So you come to your answer sheet, to the spreadsheet, and say materials. Okay, you come here, you say 60,000 is irrelevant. Okay, in bracket you say sunk cost, because if you don't tell the examiners, then they're not going to give you any mark. Okay, then you come back to the question and say what about the other issue explained? These materials are toxic and if not used in this project must be disposed of at a cost of $5,000. $5,000 is a future cost which can be incurred if we do not carry on with the project. Okay, but we want to carry on the project. We want to carry on with the project. So therefore, this potential cost could be a cost saving. So because we are computing costs, then this is a cost saving. So it's a negative cost, 5,000 negative. Please flow with me. Okay, for these headings, we can just do some formatting and bolden them. Okay, let us bolden them. Better. Then we move on to the next item. All right, let's talk of the labor. Skilled labor is hard to recruit. The workers contained have been transferred to this project from a production department, and the production manager claims that if the men were returned to him, they could generate sales of 150,000 in the next year. Okay, so the production section of this road agency has supplied the labor required, because to recruit these guys is hard to do. Okay, they're hard to recruit, so we had to borrow from the other department. All right, so from the production department to this particular project. Okay, but we are told that the production manager is claiming that if the men were at their department, okay, or were returned to him, they could generate $150,000, okay, in the next year. So you can see that there is lost revenue, so there is an opportunity cost. All right, so you come to your answer and say labor. All right, opportunity cost. opportunity cost. How much? $150,000 because we have lost this revenue. Opportunity cost, you could say further lost revenue, right? So that the examiners will understand what is going on. So this is actually a clear cost. And then you go to the paragraph again and finish everything. The prime cost of these sales would be, remember, the revenue of 150,000 is not going to be obtained for free. Okay, there are some costs associated with this particular revenue. Okay, the cost of sales. So the prime cost of these sales would be 100,000, including 40,000 for the labor cost itself. Okay, so what is going on here? The labor, ladies and gentlemen, whether we carry on with the project or not, this labor is going to be paid. All right, the labor for these guys is going to be paid. All right, so we're not going to worry about that. Okay, so if we carry on with the project, obviously we are going to pay them. All right, so they are irrelevant. All right, what about the other items in this 100,000? Obviously, because the total cost of sales is 100,000, including the labor, and we are saying the labor we do not have to worry about. Okay, but there is a cost we need to worry. Okay, that would actually impact on our project, and this is the difference. Okay, that's the cost of items like the materials. Okay, the materials involved in the production of these 150,000 cells. Okay, so the materials involved are the ones which we have to consider. So we are going to say, because we are not, because these guys are no longer at the production department, so those materials, the difference, that is 100,000 minus 40,000, that is 60,000. Those materials are not going to be incurred as long as these guys are not in production. So our opportunity cost is going to be reduced because we are going to have a cost saving. We are going to save. All right. So we are going to save on those materials because we are not going to do any production. So we come here and say cost savings on materials. That's 100,000 minus 40,000, and we should get our 60,000, which is a saving. Sorry there. Okay, as well, double click here. All right, let's move on. The paragraph is not yet through. Okay, there are some other issues which are spoken about in this same paragraph. Let's finish everything. The overhead absorbed into this production would amount to 20,000. All right, ladies and gentlemen, I want you to understand that fixed cost apportionment is not relevant. Okay, because by the end of the day, whether we have apportioned 10,000, 15,000, 20,000 to among the campus departments, we are not going to change the ultimate fixed costs that are going to be paid. Okay, by the end of the day, those total costs or those fixed costs in total are going to be paid, so they are irrelevant. Okay, so the overhead absorbed are irrelevant, so the 20,000 is irrelevant. You just have to tell your examiner 20,000 dollars overhead is irrelevant. Okay, you put a 0. Let's move on now to the other item. Research staff. It has been decided that when the work on this project ceases, the research department will be closed. Research wages for the year are 60,000. All right, and redundant and severance pay has been estimated at 15,000 now, or 35,000 in 1 year's time. So let's start with the 60,000 research wages. That one is clearly relevant because that one has to be paid this year, so it's relevant. Okay, research. All right, we come here and say wages. These ones are relevant, 60,000. Okay, but what about the redundance? Okay, if we stop now, we are going to incur 15,000, but if we stop in a year's time, then we incur 35,000. So the relevant cost here is the extra cost. Okay, the extra cost from 15,000 to 35,000, the difference, that's the extra cost. We have to worry because this project is going to be closed in a year's time, so the incremental cost is the difference. Okay, all right, incremental cost on severance. Okay, the severance pay, that's 35,000 minus 15,000. This is going to be 20,000. Okay, that's the cost that is applicable. All right, the incremental or the extra cost. Let's move on to the following item. Equipment. The project utilizes a special microscope which cost $18,000 3 years ago. 3 years ago, so 18,000 is an already incurred cost. It is a cost that has already been incurred. Okay, a sunk cost. Okay, so 18,000 is irrelevant. Why? So you come here and say equipment. $18,000 is a sunk cost. All right, what about the other one? It has a residual value of 3,000 in another 2 years. Okay, so we know that the project is going to be done in the it's going to end in the next year. Okay, in 1 year's time. So therefore, any revenue we are going to receive after the coming year is irrelevant to the project. Okay, that's irrelevant. All right, so 3,000 is also irrelevant. 3,000 is irrelevant as will be received after project ceases. Are we together, ladies and gentlemen? I'm sure we are together. All right, what else on this equipment thing? And a current disposal value of 8,000. So the equipment could be sold today and we get 8,000. However, we can't sell the equipment today because we want to continue up to the end of the coming year or up to the end of the year. So we can't dispose of it. So if we don't dispose of it, we're going to have an opportunity cost on lost disposal. Okay, so opportunity cost we're going to lose is 8,000. If used in the project, it is estimated that the disposal value in a year's time will be 6,000. So the ultimate loss on disposal, the opportunity cost, the ultimate opportunity cost is going to be how much? 8,000 today or 6,000 tomorrow. So we are going to lose 2,000. I'm sure we are together. So you come here, opportunity cost on disposal, 8,000. Okay, so 2,000, that's the ultimate cost we have to worry about. I'm sure we are flowing together, ladies and gentlemen. And are we still having other issues? Yes, there is that item on share of general building services, share of services. Okay, on the share of services, let's read. The project is charged with 35,000 per annum to cover its share of general buildings. This is related to the overhead apportionment. Remember, overhead apportionment is irrelevant because by the end of the day, the total overhead, the total cost is going to be borne by the company. So it is irrelevant to the project and should not be considered. So 35,000 is irrelevant. Okay, immediately the project is discontinued. The space occupied by the project could be sublet for an annual rental of 7,000. So that one is actually a relevant opportunity cost. Okay, because if we, like I've indicated in my initial example of the grocery shop and rental aspect, where we say that if we do the grocery business, then we are going to lose on the rental income. So the rental income lost is the opportunity cost. So similarly, in this case, the annual rental of 7,000 is an opportunity cost. So we come here and say share of building services. All right. In this case, we then come here and say the overheads apportionment of 35,000 is irrelevant. Put a 0, and then you come here and say opportunity costs on lost rentals, 7,000. Okay, the fact that you have written the 7,000 automatically it tells the examiner that it's relevant. Okay. All right, because in the exam, no time to dilly-dally. And all right, so let us determine the total there. Okay, so we come here and we say add everything up, and we get our 174,000. So that's the total project cost. Okay, total project cost. All right, let us do a little bit of some rounding, some formatting, underline there. All right, and then the sales price, we are told that sales price, by the end of the day, after we do this project or this research exercise, we then have to sell it to another government agency and we can get some money, and we are promised to be paid, I think it was 300,000. Yes, it's written here. What's going on? thing is written here. All right, yeah, that's the amounts, 300,000. All right. So we come here, we say 300,000. All right. So therefore, the difference, let's okay, you can just simply say this one minus this one. That's 126,000. Okay, that's a gain. So the issue is, shall we undertake the project or not? Obviously, we can undertake the project as it adds value. Okay, there is a gain by the end of the day, so we can just do the project. Can just do the formatting, although there are no marks for formatting, but it's a good practice to, you know, have good presentation skills. Okay, that's it, ladies and gentlemen, for the relevant costing example. Right, and let's now meet in the other coming video as we take you through other aspects. There are still so many things we need to consider, the working capital issues. Okay, working capital, we need to talk of taxation, we need to talk of inflation, make or buy decisions related to the discounted cash flow techniques. So until next time, ladies and gentlemen, may the good Lord continue to bless you. Thank you.